This is Danny Gould with the Gould team, selling Silicon Valley. Welcome everyone to another Silicon Valley market snapshot for the second week, third week here in November of 2019. Did all of you miss me last week? I'm sure some of you did. I was actually out in Boston visiting my friend Lisa Chinati, who runs a real estate team out there. They're going to sell over 500 homes this year, and I actually captured some vlog footage. J-Rod, go ahead and roll some of that footage. But anyways, the reason I went out there is because obviously I aspired, my team is growing right now, and I aspire to one day be able to sell that many units here in Silicon Valley. And so to be able to go back behind the lines there and really just internalize everything from a daily approach perspective, right? Just like the systems, the tools, the training, everything that they're doing over there. Coincidentally, we are implementing here, and it's really just going to be a very exciting next couple of years for me and for my team. And so I really have to thank Lisa for allowing me the opportunity to go out there and to really learn firsthand, experience it firsthand, because, you know, intuitively, a lot of these things, they make sense, right? Like all the things that they're doing, when you see them, you're like, oh yeah, that makes sense. But then to actually be there and to witness it all, is just another beast. Like 500 homes in 1 year is extraordinarily difficult, and no one here in Silicon Valley is doing that at this time. So I will be the first. You heard it here, everyone. We are, guys, we're pretty much in a really good spot right now. If you're a home seller, that is, you're looking good. Let's not get it twisted though. The market is not easy. It is definitely not an easy market. Homes are still selling. The trends are trending in the correct direction if you're a home seller, and incorrect direction if you're a home buyer, if you will. However, the reality is that this is not the market of yesteryear, and every transaction, every scenario is a difficult one because we're in a neutral time right now. We're in a time of stability and a time of stasis. And as we look at the numbers right now, you might start to get the idea that, wow, this is an amazing market for home sellers. And don't get me wrong, we're still in Silicon Valley, the land of the multiple offers and ultra high sales prices. We're a little bit removed from that. But the reality is that as we digest these numbers today, I want you guys to keep this in mind, that this market is not easy right now. And the numbers may be painting a slightly different story, but that's and that should be encouraging, because if these trends continue, then that will play itself out. But we're definitely in a period where we're trying to find ourselves, if you will, in this market. And that goes for home buyers and for home sellers. And so if you're on the fence right now as to buying, I think, some of these numbers might coerce you into making a decision sooner rather than later, because if these trends continue, then we could see ourselves heading into spring of next year in a very similar situation to where we were at, maybe not in spring of 2018, because that was crazy, but perhaps in the spring of 2016, 2017, where it was very healthy, very frothy, not volatile, very healthy and very frothy for home sellers, and not so much if you're a home buyer. Enough of the chatter. Let's get into the numbers for this year, guys, or for this week rather. What I wanted to point out is this velocity graph, and we've spent a lot of time on the heat maps, and we've spent a lot of time on the numbers, but I haven't really talked about the velocity of the market and how that compares to last year. And when we look at a lot of the heat maps, it's for the last couple of weeks, or even for the last couple of months in some areas. If you're a home seller, you've been looking at the heat maps and you're like, my God, this is amazing. This is an amazing time for us. And again, right, if the trends continue, then that very well may be the case. But when you're comparing yourself to disaster, it's easy to look good, right? When you're comparing yourself to the 0-16 Cleveland Browns, very easy to look like, a playoff contender. But then when you really get into it, are you really a playoff contender? I don't know. So let's look at this, for example, right? In 2019, right now, for this week rather, we are at 1,007 units, which is a negative 25% year over year when we look at last year's numbers, which is 1,335. Single family sector doing very well. We are progressing week over week in the negative direction when it comes to units, and that should be positive news to you if you're a home seller. And when you compare the velocity of the market, however, this is where I want you guys. This is what I want you guys to understand. So the velocity, we only increased 54% from the beginning of the year's numbers. Right, we're at 655 active units. We've accelerated up 54%, and of course, this number will go down and go down, especially in the winter months, and then resurface probably around second, third week of February. We'll reach this number again. However, what I wanted to point out is that last year at this time, we're a 402% increase year over year. That is insane growth, and that is nothing compared to the condo and townhome sector, where we were at 2,795% increase or acceleration from the beginning of the year, where we only had 19 units on the market at the beginning of 2018. Compare that to this year. Obviously, when you compare these numbers to these numbers, there's very little question as to why at the beginning of this year things weren't looking so great. And when you couple that with the pending numbers and the overall demand, buyer appetite in the market, we were faced, if you're a home seller, with quite a plight. Do I sell now? Or do I hold on to it? Do I hedge my bets and risk losing even more? And up until about 2-3 months ago, the reality or the story was that you kept losing and losing and losing. Now we're finally in a situation where you might have hedged, if you held on at the beginning of last year, heading into the beginning of next year, you're probably going to actually end up selling your home for more in a lot of cases. Not all cases, but in a lot of cases. And another thing that I wanted to point out is that this year, remember, I always talk about 2016 being a banner year, right? Something that was a market that was fairly normal, fairly healthy, if you will, and not volatile at all. In terms of units right now, we're very close, within 10% or so of the units. Yes, we have a little bit more, but not that much more. Like if you really look at it, not that much more. Where we really get into it is the condo and the townhome sector. We are definitely, at about a 40% year over year increase in inventory, and that has played itself out in the sense that many condo and townhome owners are now seeing their homes that last March, April were valued at maybe 5-10 in less severe cases, or 15-20% lower in the more extreme cases than they were selling just a year and a half ago, which is a very hard pill for many people to swallow. And truthfully, when I look at those numbers, it has always been the case that it's more a function of the suppression of inventory at that time, as opposed to the actual value of the property, right? And I want you guys to understand that home value, yes, is dictated by the market conditions at that time, right? So the value spiked, right? But was it artificial? And as we're kind of neutralizing and stabilizing, what you're going to find is that those were artificial numbers, and it will take us some time to get back to those. How long? I don't know. Don't have a crystal ball. and I don't really have the data set to point to or to harken back to at this point to really analyze and figure out how long is it going to take for the market to bounce back. My guess is no less than 12 to 24 months, easy. That's on the conservative side of things. But if you're a home seller right now and you are in one of those situations that I just mentioned, right? Your home is worth less now than it was 18 months ago. The question you really have to ask yourself is, would I rather be here or would I rather be there? Wherever there may be. And if the answer is I'd rather be there, and you have the ability, the bandwidth to do it, then don't sit there waiting for the market to resurge, because the numbers are very obvious. The buyers have infinitely more to choose from. We're not even factoring a lot of new construction, and that's popping up all over the place. So the tough reality for a lot of you is that you're going to be out of luck for the next year, SOL, right? For the foreseeable future. So that's why when I started this video off, and we were talking about, I was kind of like in a somber mood, if you will, and letting you guys know that this market's hard. Hey, it's not easy. Yeah, we've resurfaced, we've regained some of that momentum if you're a home seller, but truth be told, we're nowhere near where we were at the beginning of 2018 in terms of home prices, in that condo and townhome sector. Yes, single families have continued for the most part to hold their value and within 5-ish% or so, but a lot of those have also come down, right? And that's direct pressure from market conditions over the last 6 months. And as we roll into 2020, the key factor that's going to play out is, number one, do these trends continue where absorption, where buyer appetite continues to climb steadily? It doesn't need to be a sharp climb. And does that couple, or will that couple with a constant decrease in inventory? Because if this trend continues, if this year-over-year trend continues, negative 25%, as you see, should it continue, then we're in a position where at the beginning of next year, let's say, call it February, March, we're going to be in full swing. And what I have mentioned in other videos before is if you want to get a jump on that, I would highly encourage you to actually put your home on the market in January of 2020. I think you're going to see exceptionally low inventory levels for that time of year. And I do think that we're still going to have a very healthy amount of a very healthy amount of demand at that point. And so those two factors, I think, will lend themselves nicely to getting sellers what they want. If you push out into the springtime, we could see some more reactionary behavior where a lot of home sellers decide to put their home on the market at once. They see that things are going well, and we kind of get this, this saturation of the market, if you will. And we've seen how that plays out before in Silicon Valley. It never looks good. It never plays out well for home sellers, period. And it usually doesn't play out well for buyers either, because they're stuck there in limbo, thinking that they're the world's foremost expert on real estate, and they're like, oh well, it's bound to go down even more. And then they sit there, they twiddle their thumbs until the market kicks back up again, and then they're crying in their soup because they missed out on yet another wave of opportunity. And that is it's the constant theme here. And the reality is that there's never a perfect time to buy. There's almost never a perfect time to sell. But if I were to be a betting man, which I'm not, but if I were a betting man, I would put my bets on Q1 of next year being the best time to sell. We will have you as a home seller will have the most advantage for the reasons that I just stated before. Don't need to be redundant. If you guys have any questions about any of this, I know I didn't even go into any of the heat maps. Let me just put it to you really simply. The entire Santa Clara County is in the red year over year. And in terms of active inventory, at least when we look at the central part, the Mid-Peninsula continues to be in the black, which if that trend continues, say into next year, we could see that trickle down of the Mid-Peninsula higher end homes having an effect, putting pressure on prices here in the central part of Santa Clara County, and demand pendings are up almost unilaterally around the county, regardless of area, whether it's the Mid-Peninsula, Central Santa Clara County, or South County. We're pretty much up in terms of pendings almost all over the place, and they're small. It's nominal increases. But nevertheless, it is an increase, and that should be good news to you if you're a home seller. This is Danny Gould, everyone, with the Gould team, selling Silicon Valley. Thanks again for watching, and we will catch all of you in the next Silicon Valley Snapshot.